Welcome to the Finder Energy's webinar on the transformational acquisition of some discovered oil fields in Timor-Leste. My name's Paul Ryan, I'm your moderator today. Today we have Damon Neves, Managing Director of Finder Energy, who will deliver a presentation with some slides. And after the presentation, you'll be able to submit written questions through the application. So thank you for your attendance today, and I'll now hand over to Damon.
Thank you, Paul, and good morning, everyone, and welcome. So the format today is I'll walk you through the project, the acquisition terms and the rights issue. This is a big change, and I want to make sure there's plenty of opportunity for questions at the end. So for some time now, in fact, many years, Finder has aspired to acquire a development or production asset of this kind. We've always been outbid by groups with deeper pockets, but on this occasion, we've been successful. And I want to emphasise just how significant this deal is to Finder. It's transformational in a number of ways. Firstly, straight off the bat, we book 34 million barrels of oil, and that repositions Finder in the market. There aren't many ASX juniors with 2C or 2P resources of that magnitude. It diversifies our portfolio from a pure explorer to a developer, and it's a new country entry for us. I'll talk a bit more about Timor-Leste in a moment. And it also changes the nature of the work we do. And that's led us to make some staffing changes. In particular, Mark Robertson has joined us. And importantly, Mark will be the project lead for this development. And Mark has a wealth of experience in development projects of this kind. So we're very pleased to have him on the team. Many of you will appreciate that the exploration cycle doesn't move fast enough to get investors excited, and that's made it difficult for us to market the stock. But that all changes with this acquisition. One of the things we like about this new project is that we're in control of the development timeline. And you'll see later in this presentation, we've laid out a clear path to FID and first oil. There's a number of catalysts we'll hit over the next 12 to 18 months and beyond. So in terms of news flow, it's going to fuel a lot more interest in the market. Now, I've done a lot of work going into this project, understanding the development concepts and economics. And that work supports the view that we have a valid and economic development project. So we go forward with confidence as we move down the path to FID. Sorry, Chester, if you could move the slide forward. Thank you. Looking at the map here, if you get your eye in, that's Darwin in the southeast corner and Dili to the north. And the PSC is located in exclusive Timor-Leste waters. So there's no regulatory or tax connection whatsoever with Australia. Timor-Leste is a relatively new country, and there are people that faced an enormous struggle for independence. And today, Timor-Leste is a place of real national pride, hope, and enthusiasm about their future. It is a petro state. It's almost entirely funded by the petroleum fund that was built from production revenues, largely from Bayu-Undan, which is now coming to the end of its productive life. So the future of Timor-Leste is very much tied to the development of its gas and oil resources. Sunrise is the great hope, but our project has a much shorter horizon to first production, and therefore it will play an important role in Timor-Leste in the near term. Thanks, Chester. So let's get into it. The waterfall chart here is a good way to show how we're looking at this. There's a lot going on in this PSC. At the core is the initial development project, The Kuda Tasi and Jahal oil fields are discovered, they're fully appraised and flow tested. The joint development of Kuda Tasi and Jahal would see the development of around 22 million barrels of oil, and we see a lot of value in that core development project. And so that's where our immediate focus and our priorities lie. Next, there are the krill and squilla discoveries. Combined, these are around the same size as Kuda Tasi and Jahal, but they're in the south of the block, and due to the distances, these would be developed as a separate project. Now, these fields would require appraisal drilling, so they're not at the same stage in terms of development readiness, but they could form the backbone of a southern development hub. And lastly, there's a lot of exploration potential here. These are low-risk near-field prospects, which have the potential to add a lot of value. So our strategy and our work program, which I'll come to in a moment, is designed to progress each of these separate but connected opportunities to maximise value outcomes. Thanks, Chester. So we'll turn now to the acquisition terms, and this acquisition is effectively vendor financed through the royalty mechanism. That is to say, the consideration is payable out of the project cash flows once we're in production. There's a modest upfront cash component of $2 million that's payable on completion, and that represents around $0.05 per barrel of 2C discovered oil. And the balance of the consideration is contingent. So we have up to $6.5 million payable on FID. And that money represents reimbursement for the plugging and abandonment of the Kuda Tasi 2 well, which is being done by ENI next year, along with some local content obligations under the PSC. And lastly, there's a 5% gross royalty payable to the vendors from the sale of production from the PSC, and that's where most of the transaction value passes. Completion remains conditional on regulatory approvals. We're looking to close out on that by the end of this month. We've had engagement with the regulators for some time now, and we're very encouraged by their support. If you take a look at the table on the right, we're acquiring a total of 76% interest in the PSC. Under the JOA terms, we carry a Timor gap through exploration and appraisal activity, and that carry is then recouped out of their entitlement to production, and they pay their way through any development. Thanks, Chester. So turning to our strategy, we've made this move because we've been looking to diversify out of Australia and the UK. I think it's fair to say that industry sentiment is shifting away from OECD or developed countries that have signed up to ambitious net zero targets and towards the developing world where oil and gas activity and investment are still welcome. And Timor-Leste is very much one of those places. That said, the industry has been there for some time, and you can see under the map here the logos of various operators in country. Now, there's prolific hydrocarbons in this area. It's called the Laminaria High, and it's an area we know well. In terms of the subsurface, it's an extension of the same geology we've been working from the Australian side for decades. The Laminaria High has an exploration success rate of around 50%. On our block, it's even better at over 70%. And there's still a lot of untested potential, and we plan to get after that. Now, the great thing here is there's a lot of different ways we can realise upside outcomes. In terms of the core development project, Kuda Tasi and Jahal, there's the usual sensitivity to the upside around reserves and production outcomes. And of course, if oil price moves in the right direction over the next 2 years, that would add considerable value. We've also got the krill and squilla discoveries in the south, and over 100 million barrels of exploration potential. And that's near field high margin potential that could significantly scale up the development. Perhaps the nearest upside opportunity is we will be running a partial divestment process. And that transaction could be very important in 2 ways. Firstly, it will give us a look-through value for the asset, and it should provide a CapEx funding solution. Uncertainty around CapEx funding is possibly going to be the main impediment to the value of this project being fully recognised in the share price. So there's potential for a re-rate in the share price off the back of a deal for those reasons. And this is an area where Finder has a strong track record. We've demonstrated our ability to attract industry funding for our projects. And we believe this project is going to attract strong interest from potential industry partners. Thanks, Chester. So I mentioned the Lemon Area High already. This is a prolific oil province and it's produced hundreds of millions of barrels. We like the odds in terms of exploration here, and we've got some great prospects in both the north and south of the PSC. And if we have exploration success, then we're talking development hubs, which would take this project to another level. Important to realise what we see in this area is great quality reservoirs with pressure support from aquifers. And this translates into high recovery rates and high deliverability. And in turn, that means strong project cash flows and superior financial returns. The Kuda Tasi 2 well tests indicated flow rates of greater than 20,000 barrels of oil per day per well. Similarly, nearby fields in the same reservoir formation have demonstrated high deliverability. Lemon Area on the western edge of the block there commenced at rates of over 100,000 barrels of oil per day. Buffalo, over 50,000 barrels per day. And Kitan, which was excised out of the middle of the block there, was around 45,000 barrels a day on startup. So look, think for a moment about what production of even, say, 30,000 barrels a day would mean for a company like Finder. Thanks, Chester. So the work program, which I'll talk to on the next slide, is designed to meet our primary objective here, and it's simple, and that is to get to FID and first oil as quickly and cost effectively as possible. The schematic shown here is our base case development concept. It's a leased FPSO with 3 development wells. That's 2 in Kuda Tasi and 1 in Jahal. And this is a very conventional development concept. It's seen throughout the Northwest Shelf and elsewhere in the world. And what we're calling the appraisal and exploration upside project is about capturing that upside potential that I spoke about earlier. Thanks. So look, there's a lot obviously going on this slide. The timeline sees us getting to FID in 2026 and first oil sometime in 2027 or 2028. We're about to kick off the reprocessing of the existing 3D data. That's called the ICANN 3D. And that data was acquired in the early 2000s. And we know we can get a lot more out of that data using modern high-end processing flow like we have in our Big Buzz and other projects in the North Sea. The engineering work for the development will proceed in parallel. And in actual fact, we started this work with Petrofac some time ago. Petrofac has completed their initial concept engineering study, and that included a market survey of suitable production vessels. So you can see here that Finder follows a quality assurance process. It's a gated system where the progress into the next phase depends on meeting the requirements of the current phase. And we're now entering the select phase, and that will see the selection of the preferred development concept as well as pre-feed engineering. The bells at the top are there to demonstrate the frequency of market announcements as the project progresses. It's a lot more active than the exploration project timelines. And as I've mentioned, we'll be running a process to identify a development partner, and we see that as a high impact event in terms of getting the market to recognise the full value of this project in the share price. Thanks, Chester. So turning now to the entitlement offer, it's priced at 4.8 cents. So it's priced pre-deal at a discount of around in the range of 15 to 20% of where we're trading at prior to the announcement of the acquisition. And that's within a fraction of a cent of our cash backing. So we do feel this is a very attractive pricing point ahead of multiple catalysts. And for that reason, it was important for the board to make this offer available to our existing shareholders. There's a top-up facility, and that will allow shareholders to apply for up to double their entitlement. Our major shareholder, Longreach Capital, are right behind this deal. They provided a commitment, an irrevocable undertaking to take up their entitlement in full. And that represents around 3.2 million of the 6 million rights issue. So we're already halfway. Also, directors and management, including myself, and in fact all our staff, will be taking up their entitlements in full. So in short, we think this is a great deal. Thanks, Chester. So briefly, here's the offer timetable. Record date's tomorrow, and the offer period will run through to the end of the first week of September. So shareholders will receive their offer paperwork in a little over a week. So keep a lookout. Do get your forms in, and we'd appreciate your support. Chester? So we're raising 6 million. The use of funds table is pretty self-explanatory. The completion payment in Aussie dollar terms is about 3 million, and the balance goes to progressing the work program and other costs. Thanks, Chester. So let's take a look at the effect of the rights issue. So it does add up to 125 million new shares. Because it's a rights issue, those shares are being offered to our existing shareholders, so they can avoid dilution by taking up your entitlement. Looking across the sector, Finder maintains one of the tightest capital structures, and that offers shareholders significant leverage. We've managed our cash well, and we're years ahead of our forecast when we last raised money when we IPO'd. So we're trading at the moment just above cash backing. Obviously, our current EV doesn't reflect the addition of 34 million barrels of net oil. And we've included the EV per barrel of 2C net resources, and that stands at only 6 cents per barrel. So there's a lot of growing room there when we look at comp data. So at these prices, there's limited downside risk and high leverage to the upside. there's discovered barrels that aren't yet valued into the share price. And we have a series of catalysts over the coming months as we progress through the forward program and hit those project milestones. So I strongly encourage shareholders to take up your rights and pick up a bargain. Similarly, there's a great opportunity right now to buy on market. So with that, thank you for dialing in. I'll pass back to Paul and we can get into some questions. Thanks, Paul.
Thanks, Damon. Yeah, we have a number of questions that have come through, so thank you for those. And just a reminder, there's a little spot on the Zoom app there where you can submit questions for us to answer. So, Damon, first one here asks, this is somewhat of a shift in strategy compared to what you've been doing. What is the intent in regards to your capital structure and funding going forwards?
Thank you for the question. Yeah, so I think the big issue and the question I've been getting is, this is an ambitious project for a company of Finder's size. How do you expect to fund the capex required to develop these fields? And look, the answer to that is we'll be running a process to identify a partner to come in. We'll trade down some of our equity. We've gone in high at 76%. And so it'll be a partial sell down to introduce a partner. Look, that could be a developer and they could come in and potentially take over the development. But, we're preparing to develop ourselves. We'll see what that process brings. But look, our view is, there's going to be a lot of interest in an asset like this. This is a greenfields development. It's not one of those sort of late life assets that you often see sort of majors exiting from and the juniors companies coming in. So it's unique and exciting in that regard, and I think there's going to be a strong interest from potential industry partners.
Thanks, Damon. So another question that's come through. So the Buffalo well that was drilled in the Carnarvon Basin turned out to be a failure. How confident is Finder that Kuda Tasi won't have the same result?
Yeah, so Buffalo probably a bit further north than Carnarvon Basin, sort of up towards our area. Look, Buffalo is a very different situation. So Buffalo was a depleted field, and they were targeting an up-dip attic that was interpreted on seismic. So Kuda Tasi and Jahal are discovered undeveloped fields. They've been flow tested. So we know the oil's there. There is no chance of a Buffalo-like outcome where we drill and don't find anything. We know these wells will produce. Oil's been recovered and flow tested from both Kuda Tasi and Jahal.
Thank you. Another question here. Why is this acquisition better than other development and production assets Finder has evaluated?
Yeah, so we've been in the market a long time looking at development and production opportunities. I guess there's some general observations. We typically see a couple of things. It's late life assets that invariably have significant abandonment or decommissioning liabilities associated with them, which are very hard for juniors to swallow. Or we see integrity issues with the infrastructure. So again, this is a greenfields development. It doesn't have any of those issues associated with them. And I think that's certainly part of the appeal for us. And I think why there's going to be such strong interest in partnering up on this asset.
Okay. So another question in relation to things outside of this, I mean, are there other catalysts for Finder outside this acquisition in, perhaps with what's happening with UK assets, for example?
Yeah, look, it's very much business as usual in the UK. Look, we are progressing with farm out discussions. That's something we hope we'll see some action on this year. You would have seen we put out some material on the Whitsun prospect in our P2528 licence. That's come together very nicely on the reprocessed Big Buzz 3D, and we think that's a very strong candidate for a farm out partner with potential to be drilled as early as next year.
Okay. So can you tell us a bit about the situation in Timor-Leste in terms of the government and its level of support, if you like, or engagement and permitting and the things that you need to do to move things forward with this project?
Yeah, look, we're aligned. We're very much aligned with the Timor-Leste government. We've had the opportunity now to go in country. I've met with the minister, the president, and a number of the senior directors of the ANP, as well as our joint venture partner, Timor Gap. And look, they are very supportive, excited about Finder coming to Timor-Leste, and excited about the potential of this project. We've had very productive discussions around our planned work program. And as I mentioned earlier, this, Kuda Tasi and Jahal, in economic terms, I mean, they're not a Greater Sunrise or a Bayou Undan or something of that nature. But what they do represent is an opportunity to bring on new production in a time frame of only a few years. So at this time, where Timor-Leste production is dwindling, Bayou Undan's in its sort of twilight years, this Kuda Tasi and Jahal become quite strategically significant.
And the existing discoveries, how extensively have they been appraised? And can you give us, I guess, an indication of the quality of the data that you've got?
Well, there's nothing more to do on Kuda Tasi and Jahal in terms of appraisal. We're going into a development phase. So they're fully appraised. We've got, across Kuda Tasi and Jahal, a total of 5 wells, and we flow tested both reservoirs. So look, they're ready to go. The work we'll be focused on is, there's reprocessing of the ICANN data, which will help us with mapping the faulting and placement of development wells. And really, it's a case of refining the engineering work that's been done to date to land on the final development concept and lock down the economics based on, refining the key cost inputs around the project.
And just got I guess it was a follow-up question on the rights issue. So how is that being underwritten by anyone, or is it?
No, look, it's not underwritten. Longreach has given an irrevocable undertaking to take up their share of the rights issue. That's a little over half the raise, so over $3 million is done. And look, as I say, it's attractively priced. I think I'm hopeful we'll get a good response from shareholders.
Okay. Another question and a comment. Looks to be a very exciting project. Any news in regards to P2610 with Equinor?
Yeah, look, it is an exciting project, and certainly the team here are very excited. In terms of 2610, so that's the licence on the border of Norway, or Norwegian waters, that we're partnered 50-50 with Equinor. Contains the Boas prospect. which is a large gas condensate prospect, over 700 Bs, that would be, in success, developed via Sleipner into European markets. Look, the joint venture discussions are progressing with Equinor. I understand Equinor are drilling a prospect up dip potentially next year. We're waiting to hear about firming up their plans, but it's clear Equinor are aggressively going after gas for European markets. They announced not long ago they'll be drilling of the order of 30 wells, exploration wells per year, which is quite extraordinary in the current environment. And I think Boaz's future will be tied probably to the outcome of the up-dip prospect. If that one comes in, and it's always great to have someone else drilling around you and de-risking your prospects, but if that one comes in, I think Boaz would be pretty much a sure thing to be drilled.
And the final question we have here is there potential for new technology to commercialise the Kuda Tasi and Jahal fields?
Yeah, look, there is. So we're looking at a number of new technologies. I did mention the seismic reprocessing technology we're using, which on vintage data like ICANN, we can get a lot more out of the data without a lot of cost associated with that. We are also, I'd say we're very interested in some new development technologies, and that's something that, again, with Petrofac, we're taking a close look at. But those technologies, they could shave a significant amount off the capex. There's still a lot of work to be done around refining the development concept. Obviously, a leased FPSO is the preferred way to go, where that would itself significantly reduce capex. But look, there are some other technologies we're looking at that are fit for purpose for this kind of development that could save us a lot of money and improve margins here.
Okay. Well, thank you, and thank you, everyone. There are no further questions. Perhaps, Damien, if you'd just like to make any closing remarks. Yeah,
thanks, Paul. Look, you probably, or hopefully, you've got a sense of how excited we are. With this acquisition, we think it's a great project, and we really see a future here for Finder. We share shareholders' frustrations with the timescale of the exploration cycle, and we really think this is a shift in the right direction for Finder. So look, thank you everyone for joining us today. Always available for a chat if you have any more questions. Look forward to talking to you on the next occasion. Thank you.